afternoon and good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will continue to develop the algorithm using the indicator money flow index. This is the second part of this series involving this indicator MFI. Let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last session, we had defined the Euro USD as the default instrument, which was being matched with the candle instrument to get the instrument subscription done. Here I think first input is missing, which I will add the error of omission, I guess. Position info, all position amount equal to 0. All right. Afterwards, the 4 hourly MFI blocks were added to look for the price volatility data and how the MFI is providing us the output value, which we can use to see whether the money is flowing in or flowing out for the underlying instrument. And once we are sure that the 4 hourly trend is on our side, we can look for optimum trading opportunities using the lower time frames of 15 minutes. So I have added these two MFI blocks of the candle period of 15 minutes. To look at the price volatility, we will take the help of get historical candle. These two with the varying candle with the varying shift value have been added, each being of 15-minute candle period, and later on these two are of 10 seconds each. To consider the price action data, the difference between high and closing value, we have added these two calculation expression blocks. So now let us head to the JForex platform, where I will give you a refresher of sort of what the logic is. It's kind of simple. We simply want to make sure that we are trading on the side of the trend. So for that, we will consider the 4 hourly time frame first. On the 4 hourly time frame, we want the money flow index values to be on the rise for buy trade, and if the money flow output values are on decline, then we will consider the short sale opportunities. So we are going to compare the output value of the MFI for the last 4 hourly block, and we will keep an interval of 8 hours. So we will consider the last 4 hourly candle, and we will skip the penultimate one, and third last we will consider. We will compare these two output values, and if the MFI values are on the rise, we will look for opportunities to go long, provided on the lower time frame of 15 minutes we have the optimum setup in place. So here on the 15-minute time frame, we will consider the divergence, and by divergence I mean that we are sort of anticipating the possible turnaround in the underlying instrument. So if we see that MFI output value has gone in the oversold territory, and there it has now started to turn the corner, it has now started to rise, but still the MFI output of last two 15-minute candles are below 30, and if it is on the rise, we will consider the opportunities to go long, provided the 15-minute closing values are still in the decline. So we will consider the closing value of the last 15-minute candle, and we will compare it to the penultimate one. If it is still lower and there is divergence with the MFI output, then we will consider the opportunity to go long. And as we are anticipating a possible turnaround later in time, we will not go for market trade here. Instead, we will place a order on the lower side, whatever is the difference between the last 15-minute candles closing value and the high price. We will take that difference and we will multiply it by 2, and whatever is that value, we will deduct it from the current market price, and we will place the order there, which will remain valid for 1 hour. So that's how we are going to design this system. Now let us come back to the Visual JForex platform. Here I had carried out this calculation last time around, and we have these values in place. SCR we will need to use in this session for the defining of the conditions for execution of the buy trade. Now let us start with addition of logical blocks, if-else statements. So for that we are going to need the logical components. If here we need the money flow index 10 to be greater than money flow index 14. So first input needs to be greater than second input. And then we consider the money flow index 15 and money flow index 16 values, and both of these should be below 30. So I will put 30 as the second input. First input less than second input. All right. Then we compare the values between themselves. Here the money flow index 15 needs to be higher compared to the money flow index 16. So for that I will take these two values and compare it. First input greater than. Then we consider the price action data, where we will need the closing value of last 15-minute candle to be lower compared to the penultimate 15-minute candle, which is candle 18. So the candle close of candle 17 needs to be lower than the candle close of candle 18. So here I will take the auto-created variables. Candle 17 candle close needs to be lower than candle 18 candle close. Okay. And we are not really concerned with how last 15-minute candle close, or you can, even if you feel like, you can add the condition that it should be still in decline. So that is also a possibility. So let's go for that. We will add the condition that the candle 17 candle close needs to be lower than the candle 17 candle open. Okay. First input less than second input. First input here also. First input less than second input. I will add multiple action here, and then we join it on the lower side. All right. So we have defined these 6 requirements. Now, coming to the exact entry point, which is going to be when the price starts to rise above the closing level of last 15-minute candle. So we have to compare the closing levels of candle 19 and candle 20 with the closing value of candle 17. So I'm going to need 2 more if blocks, and here the close will be common input. All right, and then we consider the closing levels of candle 19 and candle 20. So all right, 20 should have closed on the lower side, so first input less than second input, and after that we get in the pending open. Trading component, there is going to be a limit order. First input greater than second input. Now we will have to use the values which we had defined yesterday. There is going to be a limit order, so I use by limit. And we have this difference of the high and close, which we will deduct from the last tick price or closing value of last 10-second candle. Anyway, it will work. So I need one more mathematical component, calculation expression. And let us take tick price. Since we are using on candle as our start point, I will take last bit candle, candle close, and this difference, and we will carry out A1 minus A2. Okay, so we get this as our buy entry point, BEP. I think we need to multiply this by 2, as we are likely to see that the difference between the close and a high is not going to be much, as this is the 15-minute candle. So for that purpose, I think I will add one more variable too. So let's create a new variable with the start value of 2. and this will be A1 minus A2 multiplied by A3. Okay, this will be our execution point. This will be the order price point. Now, coming to the second input parameter of this create command block, we leave the default instrument Euro USD as it is. I will change the lot size to 0.1 million, slippage 2 pips, stop loss and take profit. We will keep it in proportion of the price volatility. So we take this difference, actual difference calculated, and we multiply it with 2, and then we multiply it with 10 raised to the power 4 to convert it into the integer data type. As pips, we need to define in terms of integer, and Euro USD has 4 decimal points. So for that, I'm going to add a couple of calculation expression blocks. And we multiply it with 10 raised to the power 4, that is 10,000. So there is going to be A1 into A2 into A3. All right, and I will create the variable here. And we multiply it with 2, and that will be our take profit. So this is the variable with the start value of 2, A1 into A2, and the output value will be assigned to this variable BTP. Now we need one more variable for defining the order validity. So I am going to add one more calculation expression block and define the order validity, which we want to be 1 hour. So we need last tick time and add 3.6 million ticks to it. So this is going to have start value of 3.6 millions. Yes, I got the number of zeros right. That's what I think. So this will be A1 plus A2 and I will create the variable here to make sure data type is as per the requirement, that is long, and assign that variable to this calculation expression block. Okay, so with this we have defined all the required parameters for this trade command block. And I have joined it to the multiple action. If we check, the trade flow should be going till the very end. Yes, it is. So that's it for today's session. I hope you have been able to understand the logical as well as the execution part of this buy side of the equation involving the indicator money flow index. In the subsequent session, we will be seeing how we can define and design the sell side of this algorithm, and once we are done with that, we will have the fully functional algorithm ready, which can be utilized in the market provided it works well on the historical data. So that's it from my side for today's session. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need to take the assistance of JForex platform. So all these links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.